Podcast is now starting. All attendees are in listen-only mode.
Hello and welcome to today's webcast hosted by the Sales Management Association. Our session will start momentarily. First, we have just a few brief announcements. Please note that we will not open attendees' audio lines during the live broadcast today, but we do welcome your questions and your comments. Please send those at any time to us using the small chat window labeled questions. You'll find it on the right side of your webinar application. So anything you type in there will come to me as moderator, and I'll read it during Q&A on your behalf. Also, as a reminder, we'll be recording our session. We'll make it available to our members in the Sales Management Association's resource library. The Sales Management Association is a professional association for sales operations, enablement, effectiveness, and leadership professions. We provide our members with research, case studies, training, peer networking, and professional development. If you're joining us for the first time, we'd like to welcome you and encourage you to visit us online. You can find us at salesmanagement.org. We'd also like you to save the date and register for our first online conference. We'll do this on May 6th. We're rushing this event to production very quickly to meet the, in some cases, urgent demands that many of our members have around planning, sales performance management, coaching and development, sales enablement and technology. We're also very pleased to announce today for the first time that retired General Stan McChrystal will join us as a keynote speaker at the event on May 6th. We're making the first 2,000 registrations free, and they're going fast. So if you have an interest in this event, please register soon. It's at salesmanagementconference.com. We hope to see you there. My name is Bob Kelly. I'm Sales Management Association Chairman, and I'm pleased today to introduce two speakers, and then when they're done with their prepared remarks, I'll moderate some discussion. Our speakers are Rob Blome from Open Symmetry and Brad Berneman from Vericent. Rob Blome is Senior Vice President of Sales and Alliances at Open Symmetry. With over 15 years of experience in sales effectiveness, performance management, and technology, Rob has managed consulting projects for Fortune 100 companies in a variety of industries. His focus at Open Symmetry is driving the sales organization's reach in order to drive their aggressive growth goals and also remaining committed to customer success. Great to have you with us, Rob. Rob is joined by Brad Berneman. Brad is Regional Manager at Vericent, a software provider of incentive compensation and sales performance management solutions for mid-market and enterprise organizations. Brad has 20 years experience in the SPM sector and deep expertise in sales effectiveness and incentive comp solutions for the insurance sector. So, gentlemen, thank you very much for being with us. Rob Blome and Brad Berneman, welcome to you both.
Thanks, Bob.
Thanks, Bob. So, Bob, I appreciate the introductions, and it's great to be here, obviously, talking with everybody. And first off, thank you for making time. We sincerely hope everybody is safe and doing well. So for the discussion today, I thought I'd provide a little bit of context on what we're going to be jumping into. The idea is that we've been working in this space, as Bob mentioned, for quite some time, almost primarily around sales compensation, sales performance. And when we were thinking about this presentation and the ideas we wanted to present, we thought it might be okay or might be interesting for people to understand, how different SPM technologies can help address some of the main or core issues around financial management. And so as it relates to this discussion today, what we're going to do is talk a little bit about sales performance best practices, different ways to think about sales compensation, and then dive into some of those specific challenges. And so the first one is conduct risk. And then we have a few other challenges that we're going to speak to. And again, the idea here is to really share with you kind of these challenges through what we've seen working with other clients, help you understand ways to de-risk or mitigate these issues using different types of technologies. And so as a bit of a disclaimer, I'm joined by Brad from Veracent, and obviously that's an SPM provider in the market. But I think it's important to understand that the concepts and the capabilities that we're going to talk about are really more vendor agnostic, and it's really sort of helping you understand how to align these capabilities and these technologies with the challenges to get them resolved. So anyway, I think that's all I want to kind of offer is just sort of the preamble. And at this point, I'm going to go ahead and turn it over to Brad for our first topic on conduct risk.
Hey, thanks a lot, Rob. And thank you all for joining us today. I really want to start out by kind of setting the stage for what drives conduct risk. When we look across, any business, any organization, your main goal is to provide value to your shareholders. Since today we're really focused on incentive compensation, everything we're going to talk about is looking at this problem and solution through that lens and trying to share some of the best practices that we've seen through the years. Specifically with this, we're looking at, making sure that you're driving revenue for your business using incentive compensation programs. And, as you start to decompose that, it's all about driving the right behaviors that are going to meet your financial goals as a company. So it starts by taking high-level strategic goals of your organization, breaking those out across the organization, and putting the appropriate compensation plans in place to help drive the right revenue-generating activities with your customer-facing employees. Now, what ends up happening sometimes, though, is that strategic vision gets misinterpreted. We see organizations that put incentives in place that drive all the wrong behaviors and can really lead to some big problems, right? Behaviors that are out of line with the law, with regulatory, directives, as well as just being plain morally wrong. And when this happens, what you're going to see happen is shareholder values erode. It's going to cause huge problems, open you up to litigation. And we've seen some big examples of this in the past. There's been some large banks that have had, with tremendous image that have been tarnished by scandal. And banks are a place where people are putting their money. You want to be seen as trustworthy. You don't want to be seen as some place that's, exposing fraud or challenges to your customers. So that really leads us to the focus here, which is conduct risk. How do we identify conduct risk and how do we avoid it? And for us, it's all about, we've got this definition. It's identifying the risk that your employees might be taking, or even third parties, on behalf of your company, acting in ways that would cause risk or harm to your customers. We want to avoid that at all costs. And what we're going to do over the next couple of slides is really dive into how you can be proactive and identify problems before they become serious challenges for you or your company. But before we get going too deep into this, I'd really like to throw up a quick survey question and see, on a scale of 1 to 5, how important is conduct risk for you as you're planning your incentive compensation? Bob, I think you're going to help me with the survey. We'll give you guys a couple of seconds to respond to this question. All right, we'll give you just a second more.
Looks like about half our audience has voted, Brett. So we'll
all right.
We'll close the poll in about 5 seconds for those of you who'd still like to. So 5, 4, 3, 2, 1.
All right. Thanks for that. We'll go through the results of the survey here in just a moment. So as we start to break down how you manage conduct risk within your organization, the first real way to do it is to understand what are the indicators that drive conduct risk. We see these come in from external sources, things like customer churn, strange account behavior with customers, maybe social media, feedback from your customers themselves. We also see internal indicators, that could point to conduct risk. Things like employees raising concerns, internal investigations, maybe outliers with your variable incentive compensation, or disciplinary actions. Because everything we're talking about today is through that lens of incentive compensation, we really want to focus in on the things that we know we have data for, that are available and accessible through the incentive comp system. So, we've really focused in on churn, account behaviors, and outliers with your variable incentive system. That's not to say that, customer surveys, social media, these things couldn't be captured and input, and they could actually be data points that you're looking at as you consider where conduct risk is a challenge for you. It's important to take those indicators and put together a good classification system within your organization. The idea here is to make sure that you've taken those identifiers and you've got them consistently measured throughout the organization. When you're building out these categories, you probably have some overlap. For example, you may have fraud as one and mistreatment of a customer based on age or sex as another. You may actually end up hearing that there are customers that are being treated unfairly through deceptive practices due to ageism. If that's the case, it's a combination of these two, and you want to make sure that you're able to capture that classification correctly, so that as you're doing more detailed aggregate analysis of all your data, you're not missing anything or miscounting what you see. Being able to capture the data at this level is going to lead you to earlier identification of issues and really help be more proactive, so you can avoid problems getting out of hand within the company. So over the last several years, our team has been really fortunate. We've been able to work with a number of banks and financial services firms, along with former regulators from the Federal Reserve and the boards of trade, to really help put together some conduct risk proactive detection mechanisms. And it really comes down to taking best practices to align technology and the information that we've talked about already around these indicators to identify what are the really important key risk indicators that you need to be monitoring and watching for. And what we've seen our most successful customers do is take that and build out dashboards and reports that will help them be able to identify where there's problems, where there's irregularities, and get to those before they become big problems. I'm about to pass things over to Mike Fisk. He's going to walk us through and show a couple of examples of how we've done this for some customers. Before we go into it and show it, I think Rob mentioned this earlier. We want this to be very educational. What we're doing here is all about showing what the art of the possible with any mature incentive compensation solution. Mike and I are both with the organization Vericent, and we've picked some screenshots from existing examples we have to be able to share that with you. But it could really be done in any tool. Mike, I'm going to pass it over to you to walk through the next couple of screens.
Excellent. Thank you, Brad. Great. Hopefully everyone can see the dashboard that we have put together here. Really, the goal of using an incentive compensation system to track conduct risk is to be able to go through and look through that data and just pick out the key pieces of information where risky behavior could be occurring. Once you have an incentive compensation system, we have all that transactional information. What we can do is filter it for, set different types of thresholds or variations of where we want to find some data that we've tagged as possibly risky. In this particular dashboard, you'll see some of the different highlights that we've called out. So we're looking at specifically account inactivity, accounts with minimum balances, and early account closures. These may be sales reps that are opening and generating new accounts. They're just churning to make up their volumes look good, but maybe they're not actually legitimate accounts. Using an incentive compensation system, this is something that we can go through and identify. You can see how we're tying that risky activity with their total incentives, which is in the lower right-hand corner of this particular dashboard. So we always want to make sure that we're looking at, are these activities actually generating incentives, and making sure that we're identifying these relationships. The nice part, if we go to the next slide, is we have the ability to go through and drill in on any of these information to get more details. So we generally start at a very high level, is what you'll see in an incentive compensation system, and then be able to go down into all the different details. So here we're still looking at it from a total level. You can see our ranks of our regions by each of the different totals based off of all the different queries that we've written. We're also looking at increases. So we'd like to be able to identify if there are any changes in practice from our groups that's driving risky behavior. So these reports are also drillable. So when we're looking at a region level, if we want to drill into a region or branch, we can do that as well. So you'll see on the next slide, Brad, if you don't mind drilling into, and we're looking at this at a region level. So we're able to compare this region against all its other regions to see what type of activity is occurring. And not only down below, we're looking at this at branch by branch level. Maybe it's not something that's occurring region-wide, maybe it's something for a branch. So really the goal of using this incentive compensation system is that you have that visibility to go through and query very quickly all those different metrics and be able to present it in dashboards so you can identify and stop any sort of risky activity before it takes hold in your organization. So Rob, I think I'm turning it back to you now.
Yeah, thanks, Mike. Let me see if I can affect the screen change. Oh, right. So survey results. Bob, was there anything that you got back from the survey?
Indeed, there was. Would you like to see it, Rob?
Bob, that would be awesome. Thanks.
That'd be terrific.
Okay. All right. That's in line with what I guess anecdotally I've been hearing in the market. So that's interesting to see. Thanks, Bob. Thanks for putting that up. Okay. All right. So as we continue on our journey, trying to make this change. You getting there? Okay, so as I said at the beginning of the conversation, the idea was to unpack, if you will, some of the challenges, some of the issues that we've seen in the market, some of the things we've seen from our survey data, and help you align, are there ways to mitigate those challenges, those issues through SPM technologies? And so what we want to do is dive into a few of those right now. That said, and I apologize, I forgot about this slide. This slide is actually interesting in that it is a model that we use at Open Symmetry to discuss sales compensation. And the reason this is relevant is because this is how we can start classifying the challenges or the issues that come in to the organization from a standpoint of administering sales compensation. And we effectively call this our 5 Cs. And so the idea, if you will, is that this model kind of tracks data as it comes in. So it's collecting the data from the different source systems, how we credit the data to the right folks in the organization so that they're actually getting credit for the activities they perform. The calculation really talks about the comp plans, bonuses, and things of that nature. And then the compensate is moving pay out the door, right? Getting it over to ADP or whatever payroll service you use with the right qualifiers on it, such as draws or guarantees and things like that. And then the last C really focuses on communication. And you can think of this as a sort of a business intelligence strategy for your sales performance management program. Who needs to see the data? What format do they need it in, the frequency, and what are they going to do with it in order to do their job? And as I said, this is the framework we often will use to help companies understand what they're doing well, what they're not doing so well, and then some of the things that they can work on to improve. Now, as it relates to the next slide, we actually grabbed a bunch of example challenges from the banking industry and the financial area that we then classified across the 5 Cs. Now, I don't want to unpack all these, and we don't have time to go through all of them and understand how we can mitigate them or look at them through an automated lens. But that said, I did want to share kind of how we thought about them, and then we did pull out some very specific issues. So the first one was on credit management. So we'll talk a little bit about that and some of the challenges. The forecasting and analysis, the referral management, and then managing changes. Given the current economic environment, we thought managing changes might be an interesting one to talk to. So at this point, we do have one last survey slide or the survey question to ask everybody, and that's really on a ranking of 1 to 5, how important each one of these 4 items are to you. So Bob, is that something you can tee up for us?
Indeed it is. So the way this is actually going to be a series of polls. This is how we're forced to organize this in GoToWebinar. So the first we'll ask about credit management. I'll put that one up right now. And then if our audience would be so kind as to vote promptly, we'll leave it open for another 20 seconds or so. And again, this one really is dealing with credit management. We'll deal with the other 3 issues momentarily. We'll give this one 5 more seconds. 3, 2, 1. And then let's do the next one. We'll ask the next question. This one has to do with forecasting and performance analysis. It asks how important a consideration is forecasting and performance analysis in incentive compensation planning for your organization. I'll do this one another 5 seconds. So that's 5, 4, 3, 2, 1, and we'll go on to the next poll. The next question is how important a consideration is referral management. See your choices there. I'd like to applaud our audience today for their prompt and efficient voting behavior. Another 5 seconds on this one. 3, 2, 1. And our last poll, which has to do with managing changes. And we'll let you vote.
Yeah, just for some context on this one, team, this is managing comp plan changes, making quota adjustments, changing targets, moving people around, things like that. You can think of anything that might happen mid-year that you need to address and adapt your system towards.
Very good. Thank you to all. Back to you, Rob.
Okay, great. And I guess in hindsight, we might have asked these poll questions after we dug into these a bit more, but we'll see what happens. So I don't see the slides yet, Bob. I still see the survey question. You guys can hear me?
Sure can, Rob. It should be, it should resolve in a moment.
Okay, I just saw that I am re-establishing a connection, so hopefully I'll be able to see this come back online quickly.
Yeah, we must apologize. GoToWebinar has been more than a little overburdened today. From
Quirky.
Tell. Yeah, indeed.
Okay, so you know what, Brad, if you can see the slides, will you just tell me kind of where we're at? Because I show a connection lost.
Yeah, absolutely, Rob. We're on the addressing challenges with SPM with the 4 topics. We're ready to move to the next slide.
Okay. Yeah. Let's jump into that. So right here we're should be the credit management.
Yes.
Okay, beautiful. So from a credit management standpoint, I mean, this is in essence just dealing with the transactions that come into the system, being able to assign credits to the right people. And then in the banking industry, one of the things that I caught along the way is the ability to identify new to bank revenue. So, and that really speaks to our ability to, or the challenge, if you will, of assigning credit to different transactions as they come in. So some pay, some don't pay, and you do different things with it. So those are more or less the challenges we understand in the banking industry: high transaction counts, complex crediting, and the ability to identify the credits you need. Now, so when we talk about sales performance management, if you're not already on one of these platforms, these are some of the areas that I think that you can look to mitigate these issues or to resolve these challenges. So on the SPM side, all of these applications come with some level of automated data management. And that's a significant offering for a lot of companies as they manage sales compensation, because with that, there's some level of error handling, exception handling, and things like that. So not only just the automation of data movement in your system or into your system, but that error handling. There's also oftentimes the ability to handle very complex crediting. And when we're talking about complex crediting, we could just be speaking simply of, one transaction generates 15 different credits, and those credits need to be paid in all kinds of different ways. Well, these applications really do a good job of allowing you to build credit logic in the program so that people are getting paid the correct amounts for being involved in different transactions. And the last piece, and that sort of folds into it, is that NTB concept of being able to tag certain credits as they flow through the system, so that you pay different rates or different levels of pay off of those. So in a situation where a transaction is generated, but it actually doesn't create revenue for the bank, you may not want to pay off of that versus new revenue coming into the bank off of a new referral into the investment bankers. That would be something you'd want to pay off of. So these systems would allow you to kind of dive into that and figure out how to automate that process and really make sure it's managed correctly. The next slide talks a little bit about forecasting and analysis. And so from a challenge standpoint, the things we hear people complain about are the ability to develop expense models, in an efficient and effective manner. Forecasting versus actuals, really sort of tracking throughout the year, what are we actually seeing versus what did we forecast and how are we going to true that up? There's also that element of tracking performance of reps, of branches, of different groups. And this goes back to a little bit on the conduct risk. How do we pay attention to what's going on in the program? How are we knowing that people are following their comp plans and doing the right things? And then the last challenge that we tend to talk about with different companies, not just banking, is quota and goal distribution. How do we plan our quotas out? How do we make sure that we're distributing them in a fair way? And then how do we manage them in an ongoing manner? So now if we talk about what SPM should be bringing to the table, the technology should allow you just out of the gate to be able to model your plans. So if you can imagine at the beginning of the year, before you roll your new plans out to the folks, you're going to want to model those plans out, not only at a macro level to understand what the expense of your sales is going to look like for the year, but also you can start doing micro modeling against your performers. So looking at your bottom performers, your top performers to understand how those plans are going to affect them. There's also if-then impact analysis. So you can imagine through the course of the year, if changes start rolling in and you need to do different things, you can then go back into that model and then run impact scenarios against different things like changing quotas or changing goals, things like that. And that is, I think, going to be instrumental in making sure that you don't make a misstep or put yourself in a bad position with the comp plans themselves. Brad, just checking. You can hear me, right? I'm getting messages from WebEx telling me I got disconnected.
No, I can hear you just fine.
Same here, Rob.
Okay, great.
I'm sure
thanks, guys.
Things are bad enough already at GoToWebinar with this sort of Zoom thing. So anyway, continued bad times for them. Sorry, it's at our expense.
It's life and times. So the last piece, folks, that you should look to sales comp solutions or SPM applications for help on is that ongoing performance analysis. So notwithstanding the ability to track and look for conduct risk, but you should have the ability with these systems to track overall performance of the plans, of the reps, look for good quota distribution. So looking at that last point, right? How well are we distributed on our quota? Is everybody to the right of 100%? And thus, do we have runaway incentives and challenges that might occur if the word gets out that we're overpaying people? Or do we have everybody underperforming, and do we have a churn risk with our resources? So that ongoing performance analysis really does speak to the health of the program itself, the plans and how people are performing. So at this point, I thought it might be helpful to pivot back to Mike, and we've got some screenshots of different views, if you will, that we put together for other clients and synthesized down to what I hopefully will be, relevant and help you understand from a visual standpoint what we're talking about. So Mike.
Great, thanks Rob. So we got three different slides we're going to show you here. First off, what we're looking at here is from a forecasting standpoint. So incentive systems allow you to propose modifications to your plans and see what that impact is in terms of payout, both in aggregate for the entire plan, but also by period or by person. And when we're talking about changes, we're not only talking about making plan changes, so that could be moving rates around from one plan to another, updating rates, moving components of those plans around, but also doing forecasts. What happens if this product goes up by 5%? What if this product goes down by 10%? And being able to go through and forecast and model that impact. And incentive systems will do this inside of a sandbox environment, so it's not affecting your production running. So it really gives you that analysis to see if we're thinking about making that plan change, what is that impact going to be to my organization? The nice thing about using incentive systems for this is a very difficult thing to do in Excel. It's hard to build a model, and I'm sure if you've built models before, you've been asked to build a lot of different models to do this type of analysis. It's nice to have something like this out of the box so that you can go through and quickly see what that impact is and provide the answers back to your organization. If we go to the next slide, we're looking at this, as Rob was calling about, from an ongoing analysis perspective. Being able to go through and create these different types of dashboards that give you full visibility of what's happening inside your organization. So these are updated for our incentive systems. These are updated on a nightly basis. So when we're pulling over transactions and data, we're doing that on an automated basis. And that allows us to our users to be able to go through and see this information on basically a real-time updated information, so that they always can track throughout the period where they're performing and where they're going to end up. These reports are available. So we're starting at a very high level here with this particular report, which is looking at our overall performance for the entire bank. If we go to the next slide, we're actually going to go through and drill this down into a particular branch and see what's happening there. So down at the branch level, we're able to see here's what the performance is of each of the employees that are associated with that branch. Again, some high-level information about that. And then tying this back to conduct risk, in the bottom of this graph that you're going to see that branch performance. This is something that we want to make sure that we're tracking to make sure that their performance, which is the x-axis in this graph, really ties to that payout. We expect that this would be a line going across. If we see someone who's maximized their payout with minimizing the performance, it may be a case that they've gone through and figured out how to game the system somehow. So this is something that we want to make sure that we're having visibility on to make sure that our plans are performing as they should. So Rob, I'm going to throw this back to you to work on the next section.
Okay, thanks. Sounds like work. So the next area, number 3, was referral management. And assuming, Brad, we've got that screen up?
We do.
Okay. So the common challenges, as I understand them, and a very specific challenge, is really just being able to pay referral fees to folks that promote opportunities over to investment bankers. That was the one that comes to mind, and the one specific scenario that I think some banks have to deal with or have challenges around. And so for those situations, when you have to, obviously create an objective process for moving and paying off of referrals to folks that actually do kind of recommend people to investment bankers, there has to be some way to track that, right? There has to be some way to manage it and pay it. Now, as it relates to sales performance solutions and the systems out there in the market, there are various things that they can do to make that a little bit easier, right? First off, they can create an automated process so that as you generate activity or activities are generated and sourced into the system, there will be some defined automated process by which you can pay out that referral once it hits a certain mark or when some event comes true. The other thing that's nice about the solutions today is they do allow banks and administrators the ability to make adjustments. And so if a referral comes in or any type of credit comes in, you can easily log into the system and make an adjustment based on some other activity going on outside of that initial situation. And what's nice about these adjustments is it does timestamp, date stamp, and log who actually made the adjustment and offer somebody the ability to make some remarks or some comments. And what that does, obviously, is make the auditing later on much easier to go back in time and find out what exactly happened. For some institutions, some banks, we have seen very complex processes be put in place, not just for referral tracking, but for disputes and things like that. These systems can provide you with different levels of workflow automation. So if an approval process has to be put in place for this referral as it moves through the system, you can actually put a workflow, an automated workflow in place and have different people sign off on it as you go forward. So again, I think it might be okay to, or it might be good to show you visually what some of these things look like. So I'm gonna quickly pass it back to Mike before we get to the last piece.
Great, thanks, Rob. So the real key about tracking referrals is just having that visibility. So we're looking in here as an associate. There's someone who's opened up referrals in the past. We want to make sure that on their reports, on their statements, on their dashboards in this case, that they have the ability to go through and track their referrals. So what we're seeing here on this particular report, amongst all of their other information that they're being notified on, is in the middle section, they have their recently paid referrals. So they are able to go through and see any of the referrals that have generated new transactions and generated new business, and make sure that on their compensation statement that we're compensating for that. So they're able to go through and see that payout amount. Right, if you go to the next screen, as Rob was mentioning, there is the ability to go through and help from a workflow perspective as well. So being able to go through and generate and input new referral information. So what we're showing here is on the top half of the screen, it's an editable form where we can go through and capture. We really want to be able to help in the incentive system so that you have one place that you're doing all this information that triggers all that compensation information. So they're going in and putting all the key information they need to generate a new referral. And then, not pictured here, but as Rob mentioned, we use the workflow to go through and make sure it gets routed to the right people so that they get notified that there's a new incoming lead that they need to go through and act on. From an associate perspective down below, you're able to go through and see all of your previous referrals. So it's going to go through and give you that identification, again, all that visibility to understand what's happened with all your previous referrals. From an assistant perspective, we're doing some data checking to make sure that we're not tracking duplicate referrals and making sure that all the referrals are valid before they actually go through and get paid. We want to make sure we're doing that matching between the incoming referral over to the transaction information. So Rob, I'm going to throw it back to you for the making changes part of this section.
Okay, sounds good. Thanks, Mike. All right, so we thought this might be a relevant conversation or a topic for today, given the current economic environment and the fact that we're reeling from COVID, and not just within banking, but I think across the board. Obviously, with some industries even more, such as hotel, restaurant management, travel, things of that nature. We're seeing a lot of activity and a lot of requests and questions come in as it relates to, how do we effectively make plan changes in our system? What's the best practice for leveraging our system to make quota adjustments and move quotas around? And then last but not least, I think there's a lot of challenges right now on how to effectively build out and implement guarantees, draws, recoverable or not otherwise, into the system. So as it relates to the SPM technologies in the market, I think you should be able to look to these systems to help out with all of these. The first thing that is worth mentioning, if you're not familiar with these systems, is they do provide some level of access, or they're designed to provide a level of access to the business users. And so through a user interface, a UI, business users should be able to go into these systems and make changes to comp plans, to rates, to schedules, and things of that nature very simply. And it's designed to be done in such a way that you can do this in a test environment and then promote those changes in your production environment. And then you can effectively date stamp those so that they go into play at the beginning of the month or in the mid-month or wherever you need to. So that's the idea behind that. Quota management capabilities. These systems often come with some level of sophistication around quota planning as well as quota management. Now, from a quota management standpoint, making adjustments to quotas and goals, or actually moving goals and quotas between reps if they need to be furloughed or things like that, can be done without a lot of pain, if you will. And the last piece worth mentioning is oftentimes these solutions come with some level of baked-in logic, right, for managing guarantees, draws. And the idea there is that when you do need to use those to keep your payees fiscally whole, the idea is that you can leverage a guarantee in the system to ensure that, hey, for the next 3 months, we'll not pay him less than X amount. And what's nice is these systems do track that, and they do have the ability to show on comp statements and summary statement reports, both to the reps and administrators, how much of that guarantee got used and what is actually being used to pay the reps. So from a standpoint of managing changes, the life of the comp administrator, the life of the SPM manager in your organization should be made somewhat more, easier if they've got the ability to do these things in an automated and more thoughtful manner. So anyway, that's kind of the concept behind managing changes and connecting those challenges with the benefits. So at this point, Mike, I think we just have a couple more slides before we start to wrap up.
Yep, that's right. So in full honesty, this is not the most exciting slide. It's just a data table that we're showing, but it really ties to the key things that Rob was discussing here. And really, I want to focus on those last two columns where we have the effective start and end date. We're looking at this as a draw table that we have in the system, but again, any of the different data items that we're storing, such as quota values and plan components and plan rates, everything should be effective dated. And this is very important if you think of it from an Excel perspective. If you've got a spreadsheet and you type over a value, the old value is gone. So all of your formulas are now going to be pointing to that new value, and that may or may not be correct. What's more accurate is be able to go through and set the effective date of when these values are in production. So you are able to go through and make changes to this information and this data and determine when that's going to be in production in the accurate amount. So the first two rows you can see for the same person, we've set a draw at different amounts, and then midway through the year we can change it. And again, the goal is you want to be able to make these changes in the system and have them automatically flow through, so you're not having to do one-off Excel models to handle where someone's quota changes or someone's plan changes or someone moves from one role to another. You want to make sure that you're going to do this automatically in the system. And then Brad, if you go to the next slide, this is just a quick output. It's that same person that we're looking at who had the top two rows on that previous screen, but we're showing in the middle column there, we have that draw, and you can see how the draw impact is changed from one period to the next. So really, the idea of this is not only are you making changes to your models or your systems, but you're also being able to communicate that out to your end users via reports so they have that visibility as far as what has been changed. So Rob, I'm turning it over back to you for the wrap-up.
Okay. So guys, before we go to questions, I just wanted to offer a couple other areas where we might be able to provide some value or at least offer some different resources. So coming out of today's presentation, we actually put together a pretty comprehensive white paper that's going to be published next week on Monday. The idea here is to dive into very specific challenges and help companies understand how SPM technologies can support them. So it's a little bit of a specific case study, if you will, on addressing those issues that we've been talking about as well as other ones. There's a couple of case studies that we can offer. So if you're interested in reading through how other banks have used SPM technologies, that could be a play as well. And then for those that want a little bit more interactive conversation, we are offering SPM roundtables. And these roundtables are going to be kicking off in May. They're going to be technology specific as well as technology agnostic. The idea is to bring practitioners together on the phone to talk about challenges that they're addressing within their sales compensation programs and systems. Again, this is a little bit different than the design side of the house where we're talking about plan designs and things like this. This is really very much more specific to the administration and managing through COVID from that lens. And then lastly, if you're looking for one-on-one feedback on your SPM program or just an opportunity to sit down with an expert, we're happy to organize a quick call for an hour to maybe answer questions about systems and or address any of the challenges you guys may have going on today. So that concludes the presentation. And at this point, we are going to shift over to questions. And so if there are questions coming in, we're happy to stay on and address them.
It's a good time to remind the audience to submit questions now. And a question for you, Rob and Brad, is would you like to show the summarized results of the polls?
Oh yeah, definitely. Although I won't be able to see them, I think it'd be great to know that everybody sees them.
Cool. I'm going to try to do that now. And I hope you can see those. All right, here we go. Yes, these are the combined results of all 5 questions that we asked. The topic that was considered important by the greatest number of our audience is forecasting and performance analysis. It was considered important by 84%. It's followed by managing changes at 76%, and conduct risk at 55%. The remaining 2 issues were not currently considered important in incentive comp planning by more than half of the audience, and those are credit management at 44% and referral management at just 24%.
It's interesting. It's interesting. Just off the top, it makes me feel like we should have spent more time on performance and analysis. But no, that's great. I appreciate everybody participating in that poll. That's helpful to understand. So I guess, Bob, at this point, were there any specific questions we could answer for folks?
Yeah, let's get to some of those. Here's a question. The first is, how are organizations setting and revising performance targets in today's environment? And let's see, Brad, I'll ask you to take this one first, but then, gentlemen, if you want to chime in, feel free to do so.
Yeah, we're seeing a lot of our customers look at how they're setting targets and taking some of the things that are going on right now into consideration. I've been talking to a number of our customers, and they've said, with everything that's going on, they are looking hard at, how they're setting their quotas, and does it make sense to reset things a bit based on the overall economic climate that's going on right now. When you've got a strong sales team and you don't want to punish them for things that are out of their control, we're seeing a move to take that into consideration and lower things by 10 to 20% kind of across the board. Rob, I don't know if you're seeing anything different or hearing anything that would you'd want to provide some context on.
Yeah, I think my context recently is just more in the general market, and unfortunately I haven't talked to one of my banking clients in the recent times, but I think we're seeing a combination of things. I mean, I think everybody's reading the news that reps are getting furloughed, being told to kind of go home without pay so they can collect unemployment while their 401k and their health and benefits is still covered. So that seems to be a big an option that companies are exploring. And what we're seeing because of that is people are adjusting territories and they're adjusting quotas and things to cover, right? So you now have reps covering more than one territory, more than their original territory, and so having to go into the systems and create bigger, larger territories with some sort of expectation on timeline, right? So I think people are putting some thoughts around how long this might last and when they can start pulling people back in. And so as it relates to that, what would be the impact if things came back online? And so being able to adjust the quotas back up. But I mean, I apologize, I'm rambling here a bit, Brad, but I think we're seeing a little bit of everything. We're seeing draws and guarantees get used. We're seeing lowered quotas and goals. And we are seeing shifting of quotas and or territories to align with the loss of sales force. So I think all of them are on the table.
Great, thank you, Rob. I'm going to stay with you for this question. It's a little vague, but you might have some, insight or some perspective on it. The question is, how mature do you consider analytics in sales compensation management?
That's a great question, and that's sort of been the hot topic the last few years. Some of these systems are more depth than others. Definitely, the different capabilities, and so whenever we sit down with clients and we start looking at these vendors and these applications, one of the big things that we try to instill.
Rob, so sorry, you are breaking up, I'm afraid.
Oh.
Could you just the last two sentences, if you could repeat those?
Okay. I was saying one of the things we try to do is ensure that clients are thinking about what analytics means to them before they go forward and look at these platforms, because the different varying capabilities and functional offerings will determine which is the better application for them. I would say, though, that if you are going down that journey with any of these applications, not only is it important to qualify that the application meets those future state needs, but enough consideration goes into the data integration side of things so that you actually populate the system with the content that you want to look at later, as well as some of the architecture that's going to need to go into the system itself. But yeah, it is a hot topic. Things are picking up, and I think we're seeing more and more companies look at the analytics and the performance as a way to understand what is going on in their plan and their program. Great example is a company I worked with last year. They commonly would roll out spiffs and contests, and so they started putting analytics dashboards together to actually see if the value they were getting from that spend was actually providing any money. And they quickly found out that some of these contests and spiffs weren't doing anything for them, while some of them were generating significant impact to the revenue. So it's again, sort of a ramble there, Bob, but yeah, it is interesting to see the different ways people are approaching it from a technology standpoint and from an applying it standpoint.
Yeah, thank you. Well, I'd like at this time to draw the questions to a close. I must comment, though, that there were many questions about specific things companies are doing in response to the impact of the health crisis facing the world right now.
Yeah, so Bob, we've got some. Bob, I was just going to throw out, if people are interested in that specifically, I'm happy to kind of point folks to other sessions by the plan design companies. We've got a couple of those, as I mentioned, going on. I think there's some really good conversations going on in the market. So if people are looking for those conversations, please reach out. I'm more than happy to send you links and notices of what we're seeing in the market to address these issues.
Yeah, and I will also point out that our May 6th online conference will treat sales performance management as really the #1 issue. In fact, it's what we're learning from our registrants that is of concern, top concern to well over half of the people registering for our conference. So I'll put that slide up just as a way of reminding folks that you can register for that in the coming weeks. That is May 6th. Well, I'd like to just take a moment and thank our presenters, Rob Blome and Brad Berneman, and their colleague, Kevin, excuse me, Mike. So sorry, Mike. Gentlemen, thank you for being with us. It's a really important topic, and we really appreciate your insight today.
Bob, appreciate it.
Thanks for having us, Bob.
Thanks, Bob.
Yeah, so I will also just take a moment before we sign off and remind our audience that our next Sales Management Association presentation will be on April 23rd. We'll host a session at that time on rethinking the business-to-business sales funnel. We hope you can join us for that session. You can learn about it and register for it, and learn about other sessions as well on our website at salesmanagement.org. I'm Bob Kelly, Sales Management Association Chairman. Thanks again for your time and attention today. Goodbye until next time.